one of the biggest surprises in options trading is that most beginners don't lose money because Webull is actually confusing. They lose money because they keep making the same mistake over and over and over. But I have good news that most of these mistakes are completely avoidable. And today I'm actually going to show you 5 of the biggest beginner mistakes that I see and how exactly to avoid them. Today's goal is not to scare you, it's literally to help you slow down, because every mistake that we're about to talk about, I see beginners make all the time. And if you can avoid these early, then you'll save yourself a ton of frustration. The first being buying a contract because it's cheap, buying the cheapest contract. A lot of beginners realize that you can actually buy contracts with $10, $5, $20, $15. And so you're looking at this cheap contract and you're wanting to buy it. And so you actually think, oh, because it's cheap, it's going to be a really good deal because I don't have to spend that much money on it. But not necessarily, because options that are cheap are usually cheap for a reason. Sometimes these cheaper contracts need a lot of movement before they actually become valuable. If we look here at this Tesla screenshot, this is an example of a options chain. If you're not watching this playlist in order, I suggest that you are watching it in order, because I explain how to read an options chain. If you don't know what we're looking at right now, that video has already been posted on the channel. So here, this is 1.25, and because we're buying under the premise of shares of 100 equal one contract, this is $125. $172. Going up, this is $420. This is $870. This will be $1,000, $1,200, right? So we're moving up in our call section. Again, if you don't know how to read a options chain, I already have that full explanation out. And so when you're looking at this $125 contract, you're like, dang, well, this is so cheap. Why would I not buy this $100 one? You know, there's a $1,200 one, but I could just spend $125. It's cheaper because it needs a huge move for it to become valuable, especially on a one-day contract. And that is all dependent on what the market is currently doing. But let's just assume that the market is just moving in its normal pace. There's no big news going on. You know, fundamentals and technical analysis are all typical, right? Typical movement. You have to ask yourself, why is the contract priced at $125? It's because it's going to take 1, 2, 3, 4 contracts for it to push into profitability. And it's going to take a lot of movement for it to do that, to move into this in the money position. So you can't ask yourself, oh, what's the cheapest contract? Let me buy the cheapest one. You have to ask yourself, why is the contract priced this way? So this is our premium. $125 is literally what we're going to be buying, or we're going to put on our risk to buy this. And cheap does not always mean better. The second mistake that we're going to look at is buying too many contracts. So a lot of people buy too many contracts. You look at your plan and then you're like, oh, okay, I'm just going to buy 5 more than my plan says. My plan says buy 1, but I'm going to buy 5. Now, every small move that is made is going to feel a lot bigger emotionally, because as a beginner, keeping your position size small gives you a lot of room to learn, and it helps you to not care if your contract is not doing what you want it to do, because you can easily get out because you followed your risk, and it allows you to practice the skill. Trading is a skill. If you treat it like practice and not like a race, you're actually going to end up being in a better position later, instead of emotionally reacting to every single contract that you put on the line. So starting with one contract, if that's in your plan, stick to that. Don't just buy 5 because you can. The third thing, the biggest mistake, is trading without a plan. Because before you go ahead and buy one of these contracts here, you need to ask yourself, why am I entering this trade? When do I plan to take profit? When will I exit if what I place is wrong? If I think it's going to go up and it starts to go immediately out of profit, it starts going all the way down, right? I think price is going to go up. And as soon as I enter, we start doing something like this. Well, when am I going to exit if I'm wrong? You need to answer those questions before you enter, because once you enter and you pay this $125 or this $420 or this $1,200, whatever contract you choose, right? Whatever contract you choose, you have to answer those questions beforehand. And yes, I'm not saying this $125 contract is wrong, because guess what? If you plan to trade in a strategy that asks you to buy here, it asks you to buy out of the money, guess what? You're actually following your plan. But what I'm saying, the point that I was making with the first point, is you don't need to buy it just because it's cheap. You need to buy based on your strategy. So if your strategy is asking you to buy a already profitable contract, then you need to be buying where the profitable contracts are. If your contract is asking you, hey, you actually can buy cheaper today, then you actually are allowed to buy a little bit cheaper. You can buy this $125 contract and still be profitable. But the point is, you need to be picking your contract based on your plan. You need to answer those questions before you enter. If you can't answer those questions while you're entering, when will you take profit and when will you exit if you're wrong? Those are the three questions that basically say that you know the trade that you're taking. That is a plan. So you're going to be making decisions after your emotions take over if you don't answer those three questions first. Because buying a contract here is not wrong. Buying a contract down here is not wrong. Okay, the only thing that would be wrong is buying it just because it's cheap. Okay, but there are strategies that allow you to buy contracts that are more on the inexpensive side comparative to the other ones that are on the chart or on your options chain. So you have to be able to answer those questions, and those three questions are literally what make a plan. It is not some checkbox that you have. It is literally answering those three questions that make up a plan. The fourth mistake that I see so much is holding and hoping. This is one of the hardest habits to break, though. A trade, when it starts going against you, instead of following your plan, what you'll do is you'll tell yourself, oh, I'm just going to close out the chart. I'm going to let it sit. I'm going to, maybe it'll come back. I'll just give it an hour. I'm just going to head out for the day and come back and see what happens. Sometimes it'll come back. We've all been there where a trade we thought was out, came back and gave us amazing profit. But there's also trades that never come back. So hoping is not a trading plan. You have to answer those three questions that I gave you before. And the fifth thing is not understanding the trade itself, because buying something you don't understand, if somebody asks you, hey, why did you choose this contract? Why did you choose to buy this one here? Why? What made you choose that? If you can't explain that, you probably need to learn more before placing that trade. More about your strategy, more about the charts, more about options itself, or more about the options chain, or learn whatever part you're missing. Because if you don't understand why you're choosing a contract and you can't answer why did you choose it, then you don't understand the trade itself. So you're risking money without understanding when you would exit, if it's going to make you profit. When would you exit if it doesn't go in your favor? There's nothing wrong with taking time to understand what you're buying. There's zero. I would rather you take 6 months to paper trade and understand and watch this playlist over and over and over and over for these 12 short videos in the playlist. Watch this playlist over and over and over, take notes for 6 months and paper trade for 6 months, then to just be buying stuff and don't understand why. If you don't understand the trade, it's not going to end in your favor, because you don't understand why you're actually placing money. You're just risking money without being able to build consistency later. So what I want to do is just review that you don't need to buy a contract because it's cheap. Now, if it is cheap and it fits in your strategy, that's amazing. That's great. There are plenty of days where I've bought a cheaper contract because it just so happened to be cheap, but it was in the position. It was at the money, in the money, out the money, wherever I needed it. And I'm like, dang, okay, good. This is a good price today, right? But you don't buy it just because it's cheap. You buy it just so happen if it's cheap. That's fine. But you don't buy just because it's cheap. And then you never buy more than you're planning. If you looked at your trading plan and you answered those three questions and you're only supposed to buy one, stick to that. You always want to have an exit plan as well. And you don't want to hold because you're just hoping that it'll turn around, because sometimes it will, but sometimes it won't. And that's a really bad habit to break, is when it does go in your favor, you're like, oh, well, I'm going to just do this with every single trade because every trade is going to go in my favor. That's not the case. And you also want to make sure that you understand the trade before you place it. You have to understand the trade. You have to understand why the contract you're picking matches your strategy. And these 5 habits, just so we're clear, do not guarantee profits at all. But what they do is they help you to avoid the 5 most common beginner mistakes. Like, these are mistakes that happen all of the time. First, you need to be building your knowledge, and then that knowledge will lead over into having your confidence in what you're buying, what contracts you have, what your plan is, why you're holding a trade, when you'll get out. Like, if you predict, okay, I'm gonna get out here if it I'm gonna do this if it happens this way. I'm gonna do that if this happens this. That builds your confidence over time, and it ultimately allows you to build consistency that allows you to keep profits for longer. So something that might surprise you is that even after watching this entire playlist, you still might not be ready to trade options itself. So in the next lesson, the next video in this playlist, and the playlist itself is in the description box as well as pinned in the comment section. I'm going to explain why waiting a little bit longer to actually continue to learn these beginner mistakes and avoiding them, and actually paper trading for a little bit longer, waiting a little bit longer, could actually save you money in the long run. Because if you've been following this playlist from the beginning, you're building a very strong foundation, one lesson at a time, but you have to repeat it over time until you know exactly about your way of going to be like becoming most profitable for the longest amount of time and having certain amount of consistency. So watch the next video to learn why understanding options and being ready to trade are not the same thing.